Hi friends, at the time of recording this video, Nifty has been continuously falling. In fact, if you look at the current market mood, we are in downtrend because from the last 6 trading sessions, so from 7th November to 14th of November at the time of recording this video, Nifty has continuously every day falling. As a result of this, Nifty is now trading below 20 days average, 50-day average, 100-day average. And more importantly, if I show you the data as of 14th of November after the market closing hours, Nifty is now touching 200-day simple moving average. Bigger question right now is that will this fall continue? What is causing this fall and where is the bottom likely to be? So in this video, I'm going to speak a lot about these analysis and you are going to learn a lot in this video. Without wasting even a single second, let's get this video cracking. So as of 14th of November, Nifty is already down by more than 10%, but experts are already predicting that Nifty can fall by another 10% by the end of this year. And before we start believing in these theories, what we need to do is have a look at some analysis. Have a look at the past track record of corrections because it is screaming out and telling us very, very important indicators. So for that, what I'm going to do is going to the trading view and going to go back to a correction that is more than 10% or 10%. So for that, the first correction I found here was between 1st of December 2022 to almost end of March 2023, Nifty fell by almost 11%. Now, two hypercritical points about this correction is what we need to understand. First point is the FI selling between December 2022 and March 2023. If you see these 4 months here, FI did heavy selling, 14,000 crore here, 41,000 crore here, 11,000 crore, and in March it slowed down, and that is why Nifty fell down by almost 11%. And after this correction, what we see here is that the Nifty soared back like anything. So this period here between April 2023 to almost, let's say, July or June 2023, if I show you the FI data, you'll be surprised to see how FIs did buying after these 4 months of selling. So between March 2023 and July 2023, if you see these 5 months here, heavy buying was done by FIs and therefore the market soared like anything between this period. But the billion-dollar question is that, Rahul, why did FIs sold at that time? And to me, the answer lies in the valuations of Nifty. Extremely important point that nobody is talking about. And therefore, let me now take you back to the valuation. So have a look at this chart and you will very, very quickly see the pink line is showing the Nifty PE ratio, right? And I am taking this data back on December 2022. The 1st of December 2022, Nifty PE ratio was at 22.47. And when the correction started, Nifty started to fall down. And what you will note here is that by the time Nifty hit the bottom, you will see the PE ratio of Nifty was almost 20. It took a support from a Nifty PE ratio perspective 20. What does this mean? That at 20 PE ratio, market took a support and Nifty started to then reverse back and started to go back up in terms of a rally, but it came down and found the bottom at a PE ratio of 20. Extremely important point. And some of you might now say that, Rahul, you are cherry picking this particular correction. So actually, I'm not cherry picking it. What I also want to do is go back to one more correction, which is more than 10%, because the official definition of the market correction in my view is if the market has fallen by more than 10%, we call it a correction. So for that, what I'm going to do is head back to the trading view free software that I'm using here and going back to almost October 2021. So 19th of October 2021, Nifty had it all-time high. And from that time onwards, very, very interesting and beautiful chart here that Nifty has coming down, then going up, coming down, going up, coming down. Finally, if you draw this from here, you will note that Nifty has been dancing between 11% fall, 14% fall, 16% fall. All in all, Nifty was falling. So what was happening during this period? So if you look at between October 2021 and almost June 2022. So October 2021 to June 2022, let me show you the data. And for that, I'm going to go back to the FI selling data. So see this data between October 2021 to June 2022, almost every single month, FIs were selling, and this is a huge selling. Almost 40 to 50,000 crore worth of selling was done by FIs during that period of almost 6 to 8 months. Exactly the same situation is playing out right now in Indian market, and I'll come to the current market. But before that, let's have a look at the P ratio trend during this period of October 2021 and June 2022. So what you see on my screen is the P ratio between October 2021 and June 2022, the period that we just spoke about. And if you look at the pink line here, which is showing the PE ratio, almost in October 2021, the Nifty PE ratio was 28. Crazy high PE, and the sell-off started, right? And when the sell-off started, it, the PE ratio started to come down because Nifty was dropping down. And if again you see the pattern here, it came down to almost 19 to 20 PE ratio. And at that time, Nifty again took a huge support. Again, if I just go back and show you the chart here, you will see that from this point onwards, again, Nifty gave a massive breakout, right? It had gone down to almost Nifty PE ratio of 20 value. After that, market started to reverse. So what I have seen here is in the last two big corrections that we have noticed here is that as soon as the Nifty PE ratio drops to almost 20 level, 19 to 20 level, what happens? Nifty starts to look attractive for the investors, and then there is a fresh buying that we have seen in the last two corrections. Now, I'm not saying that this is what exactly will happen right now, but again, these two corrections have given us something to work with, which is that if the PE ratio of the Nifty comes down to 20, then we see that the market sort of gives a strong support at that level, and from there on, markets move up. And before I speak about what is happening right now and where we are in terms of the PE journey of the Nifty and can it go back and where is the bottom right now, before I do that, if you like this analysis, hit the like button. Let me know in the comments a simple thank you. It will motivate me to do more research for you at zero cost. Also, if you want daily insights coming from stock market, then you can consider joining my YouTube member community. I post almost on a daily basis that can help you understand what is going on in the market and can help you make some informed decisions. The feedback from community members has been excellent. The link is in the description or in the pinned comments, or simply you can go to my channel and press on the join button. With that, let's have a look at the current market situation and find out where we are in terms of the PE ratio and many other macro factors. Now, if you look at the current market conditions right now in the month of October, the FI selling was almost 1,14,000 crore. Huge selling is what we have seen. And in fact, if I show you the November data, you will very quickly note throughout the November, from 5th November onwards, if you see the data here, every day FIs have been selling in Indian stock market, right? And that's why Nifty has been coming down. One of the reasons for Nifty to come down, of course, is that FI selling create a lot of pressure on Nifty. Now, if I talk about the latest trend of PE ratio of Nifty 50, have a look at my screen. You will see that as of 26th of September 2024, Nifty PE ratio was almost at 24 level. And from that time onwards, the correction started. Right now, the PE ratio of the Nifty is almost at 21.68. Now, what we learned from the past two corrections is that the maximum we have seen Nifty PE ratio come down during the corrections has been at 20 level. So what happens if this correction continues and the Nifty PE ratio comes to 20 level is what we need to understand. So let's say Nifty PE ratio in the next 1 month or so comes down to 20 level, right? Then comes the very important question that for Nifty PE ratio to go at 20 level, what will be the Nifty's value actually? So for that, what we are going to do is we are going to look at the EPS data here. So what you see on my screen is the EPS data. At the end of 13th of November 2024, the EPS, the earning per share of the Nifty 50 is around 1086. And if I were to calculate what will be the Nifty's value if I consider the PE ratio of 20 and the EPS of 1086, we know the formula, PE ratio is equal to the value, the price divided by the EPS. So I'm going to say 20 into 1086. So let's go ahead and do that. 20 into 1086 here. That gives me the Nifty value, which is 21,720. So at this level right now, from the current EPS perspective, Nifty PE ratio is going to hit 20 level. So if I just go and talk about this level now, 21,720 level, let me go back into the chart. So this is where 21,700, 730, 740 sort of a level will come. I have just tried to draw it here. And what you will note very quickly is that this is a very, very important level for Nifty. Now, again, I'm not saying the Nifty will continue to fall and will come down to that level. All I'm trying to say is that the past corrections have taught us that this is the level at which Nifty reversed back from a PE ratio perspective. Now, if I look at this level, 21,720 level, you will also note that somewhere here at the exactly same level, Nifty took huge support. If you can see here, how many times? 1, 2, 3, 4, almost 5 to 6 times Nifty has taken huge support at 21,700, 800 sort of a level. So in my view, that is the level at which maximum Nifty can go down. Again, I can be totally wrong here. I'm not trying to say that I'll be 100% right, but if the market continues to fall, this is where the bottom is likely to be. After that, I don't think there is more pressure on Nifty that we can see from a valuation perspective. I hope this analysis has made a lot of sense to you, and this is the way you can go ahead and do your own analysis. Please don't take any of these as recommendations. But now comes the $1,000,000 question that Rahul, can Nifty actually continue to fall or not? See, sentimentally, I think right now market is under pressure. pressure, and I see two critical points that you need to understand. Point number one that you need to understand is that right now US 10 years treasury bond yield that we look at, if you look at this chart, you will very quickly see that it is right now at 4.46%. It is quite high in my view. And when US 10-year treasury bond yield is high, generally globally it's not a great sign for stock market or equity market, right? So point number one, you need to understand, can FIs come back to Indian market? Near term, I don't think so, right? Because of this data here, if they're getting better yield somewhere else, the chances of them coming back to Indian market is likely to be weaker. Again, I could be totally wrong here. Things very rapidly change in stock market. What I'm saying today might not be valid tomorrow because things have totally changed, right? But this is something that we need to consider. Point number two that I want you to focus is, let's just forget about FIs for a minute. Let's just focus on Indian market strength. And one of the key factor there is capital expenditure by Indian government. So in the budget, Indian government announced 11.11 trillion rupees of capital expenditure for this fiscal year. And right now, in the first 6 months of this year, they have already spent only 4.15 trillion rupees, which is almost 37%. So from a timing perspective, we are halfway through the year, but we have not yet consumed 50% of the capital expenditure budget. So what we have noticed so far in the first 6 months is that Indian government has not done the capital expenditure to the tune that we would have liked. And of course, monsoon was a reason, elections was a reason, and many other reasons might have played out into that. And when government is not spending huge money, what happens? The economy starts to slow down. And that's what we have potentially seen in the Q2 earning data that you might have seen coming out for various companies in the last 2 weeks. But here is a good news. This article is telling that it is entirely possible that in the remaining 6 months, Indian government may go ahead and spend more money on capital expenditure and may still hit their target of 11.11 trillion rupees. And if that happens, in my view, that is going to lift the sentiments of Indian stock market, because the Q3 results might be better. Or even if Q3 results are not better, if by the end of Q4 we see good results, then I can see some recovery happening, some rallies coming up in the market. But right now, if you ask me, the overall market sentiments are bearish. Having said that, am I buying? Am I selling? Let me give you my perspective on how I am going and finding opportunities in terms of individual stocks right now in the market. So right now, before picking any stocks, one need to be really specific. You need to really look out for many things in terms of the management of the company, the earning growths the Q2 has shown, the future forecast, and many other things. But the key important factor right now I'm also considering, in addition to all these good parameters, is the last 3 dates support level. So I'm going to look at 4th June, 5th August and 28th of October. Have a look at my screen, what you see as a sample chart. Again, no recommendations. In fact, I'm not even showing the name of the stock here. But if you see here, what you will note is that on 4th of June, 5th of August, 28th of October, this particular stock has taken support at around 314 level, between 310 to 314 level. To me, this is an extremely important data point to consider and start accumulating this company at this level, because it also ticks all my other boxes in terms of the management, the sector that I'm looking at, the earnings growth that the company has shown, the future prospect of the company. But it's extremely important to accumulate the stocks at the right price level, because if you buy a stock at high prices, the chances of gains are very limited. Here, for example, these 3 dates are important. Why these 3 dates? 4th June, 5th of August, 28th of October. Because in these 3 dates, we saw huge pressure on Indian stock market. And if a stock took a support at a particular price level on these 3 dates, it tells me that there's a strong support at that particular price level. And I think the risk reward ratio looks very good at that price level. But when you go and start analyzing the stocks, you might find something like this. Let me give you one more example. So here in this example, what you see is on 4th of June, the stock dropped by almost 407 level. Can you see this tall red candle? Huge fall, 20-25% fall. But on 5th of August, the fall was limited to 560 level. And in the last 6 weeks, if you see, the stock has been consolidating nicely at 504. So in my view, in such cases, you don't really need to wait until 407 level. You might start to accumulate at 504 level, provided all other parameters in terms of the fundamentals, in terms of the sector analysis, in terms of the management guidance for the next 2 or 3 quarters minimum is looking very positive. These are the good buy opportunities in my view. Again, not a recommendation. So in this video, I've done a lot of analysis for you. And if you like that, hit the like button. Also, if you want to get practical insights from stock market on a daily basis, consider joining my YouTube member community. You will find the link in the pinned comment or in the description. Or simply you can go to my channel and press on join button. With that, I hope you enjoyed this video. I'll see you in my next video. Until then, keep rocking.